Around this time of year, you tend to find that the markets start to slow down quite a lot. People are on holiday, there's less happening from a political and economic point of view that can really push things. And so things start to have less activity, lower volume, and can be a little bit boring. And that's what we're starting to see happening at the moment with many markets, especially with the currency markets, which we focus on quite a lot. We're having these tight ranges, and anytime there is a relatively big move, it's actually quite small compared to normal. And so it's very limited in terms of what we can do. However, this morning in my morning markets live stream for our members, one of the markets that I picked up on that I will be following is WTI oil. Now, compared to a lot of the markets that we follow, with this market, there's actually been some quite decent swings recently. Now, I haven't been following this market for the last weeks, couple of months, because it sort of broke a lot of the levels that I was focused on. But now it's back to being in a really interesting area. There are some key levels it's respecting, which we'll come on to in a second. And actually, from a fundamental point of view, it's also quite interesting. And we've had some conflicting news being released today. So early this afternoon, OPEC released their latest monthly report and kept the outlook the same as before, which shows that they expect a strong recovery in global oil demand throughout this year and into next year. So based on that, you would think it seems likely that OPEC Plus will continue to move ahead with their planned production increases that begin this month. They currently plan on increasing production by 400,000 barrels per day every month, so an increase every month, until at least all cuts have been sort of reversed that were made during the pandemic, which is equivalent to 10% of global demand. However, early this morning, the IEA took a very different view on things, and they warned that demand for oil would be slowing, mostly down to problems around this Delta variant in Asia. Now, I don't know about you, but I'm getting a bit bored of that being the reason for everything. Of course it is the reason, but it's to hear this thing over and over again. Actually, there are other variants that we need to maybe keep an eye on that we could be concerned about, and we're going to do a video updating you on those either tomorrow or next week. So, although we might not like to hear about it, this Delta variant, it's definitely having an impact. We can see in the last 2 weeks, China has increased the restrictions on travel in major cities, including Beijing, and the lower fuel consumption is already resulting in refineries reducing their usual volumes of crude for September. Now, as a result of this, the IEA has downgraded their forecast for the second half of this year, and they already estimate that demand already fell in July. So if the IEA is correct, and OPEC Plus does continue to increase production, that could tip the balance into a surplus, which would therefore be bearish for oil prices. And just yesterday, we also had calls from the White House to increase production because of the rising prices, which they say could undermine the global recovery. Other countries have also called for production to be increased even more, such as India, which has struggled to contain the virus. For now, WTI is around some critical levels. So if we look here, this is the daily chart for WTI. Over the long term, we can see that we've had this bullish structure since that sort of negative area in the middle of the pandemic last year. We've retained this bullish structure, and just earlier this week, we tested the same level that we had failed at for some time from the other side. That was a level that I was interested at the time in going short at, and partly the point that it broke through that was when I sort of lost interest in WTI for the time being. We've now tested that level again and failed. We tested it a few days ago, and just yesterday, before it closed bullish, it had pulled all the way back down to there. Now, as long as it stays above that level, the longer term bullish structure stays, but short term you can see we've actually got this bearish structure, and so far I'd say that sort of low is in line, so it shows that the bearish structure continues. We're not yet in weakness in the structure, but in coming off that level we've now pushed above that trend line. That's a strong path of resistance, and so pullbacks to that level, failing at that level, could show that we're going to be pushing back up. However, if we break through that, then it could be showing that this short-term bearish structure is continuing, the path of resistance is above, and if we test this low and break it, that would be the opportunity for the short trades. So the way I'm looking at this is looking for long opportunities above this path of resistance and short if we break it. And if we look at the hourly chart, you can see that this was the, let's call it medium term now relative to this time frame and this time horizon. Medium term bearish structure, short term bullish structure building, And right now we're testing that B point of this confirmed Fibonacci range and coming off that. So potentially with the right sort of setup here, and I'm not going to say that we're already getting a setup here, you can make your own decisions about this. We may see an acceleration to the extension levels. Keep in mind the 127.2 here is now invalid for us because it's already had its type 1 and a reversal from there. So we're looking at the 161.8. So the next decision point from here would be this previous swing high, okay? And breaking that would break that short-term bearish structure because that was the previous lower high. And we could see a move towards the 161.8. So to repeat again, while we're above here, looking for potentially long entries, with this being the first decision point, and if we break that potentially up to here, but that has to be where we reduce risk. If we head down, as long as we're above this level, things are fine. Once we break that and show weakness in this short-term bullish structure, it would show that there's more strength in the sort of medium-term bearish structure, and a sign that we could be testing that low for the longer-term bullish structure and breaking below that low. Alright guys, so let me know in the comments what your thoughts are and what markets you're following. Please do hit the like button if you found this interesting or useful. Don't forget to subscribe and turn on notifications so you don't miss these videos and also those text posts we've been putting in the community tab. Not 100% sure if we're going to continue them for the long term yet. I've seen that some of you have been liking them each day, but I'm not sure. We'll see what happens there. And don't forget, if you want to know more about how I trade, the link is in the description box to our free training. Thanks for watching, guys. Take care, and I'll see you in the next one.